Tax period for taxable persons. In the context of corporate tax in the UAE, the tax period refers to the specific period for which a taxable person is required to file a tax return. Understanding the rules surrounding the tax period is essential for businesses, as it determines when tax obligations must be reported and fulfilled. The tax period can vary depending on the type of taxable person and whether they prepare financial statements or not. Below is a detailed explanation of how the tax period is determined for different types of taxable persons, as well as the process for changing a tax period. Tax period for non-natural persons, businesses and entities. For most taxable persons, which are generally businesses or legal entities, the tax period is aligned with their financial year. The financial year is the 12-month period for which the business prepares its financial statements. This means that, in general, the tax period for these businesses will follow the same period for which they report their financial performance. For example, if a company operates from 1st January to 31st December each year, this 12-month period will be its tax period, and the company will need to file its tax return covering this period. However, if a business does not prepare financial statements for whatever reason, the tax period will instead default to the Gregorian calendar year. This means that the tax period for such a business will run from 1st January to 31st December, mirroring the traditional calendar year. Example of tax period for a non-natural person. Scenario 1. A company that prepares financial statements covering the period from 1st April to 31st March will have its tax period correspond to this time frame. Scenario 2. A small business that does not prepare financial statements will follow the Gregorian calendar year as its tax period, meaning it will file a tax return for the period from 1st January to 31st December. Tax period for natural persons, individuals. For natural persons, such as individual business owners or entrepreneurs, the tax period is always the Gregorian calendar year. This means that the tax period for a natural person will automatically run from 1st January to 31st December of each year. This uniform approach simplifies tax reporting for individuals since they will always have the same 12-month period as their tax period, irrespective of when their financial activities begin or end. Example of tax period for a natural person. An individual business owner will have their tax period from 1st January to 31st December every year, regardless of their actual business activities during that time. Changing a tax period. In some cases, a taxable person may wish to adjust or change their tax period. For instance, businesses that are part of multinational groups may need to align their tax periods with those of other group entities operating in different jurisdictions. This can help avoid the need to prepare two sets of financial accounts for different periods, making the accounting and tax filing process more streamlined. To change their tax period, a taxable person, whether a UAE incorporated entity or a foreign-based entity operating in the UAE, must submit an application to the Federal Tax Authority, FTA. The application should detail the reasons for the change and propose new start and end dates for the tax period. If the FTA approves the request, the business will then be required to follow the newly specified tax period. This option is particularly useful for businesses that wish to consolidate their financial and tax reporting periods across multiple countries or align their reporting with a fiscal year that better fits their operational calendar. Example of changing the tax period. A UAE-based company, part of a multinational group, operates under a financial year from 1st October to 30th September. To align with the tax reporting of other group entities, the company may apply to the FTA to change its tax period to match the calendar year, running from 1st January to 31st December. Further information on changing the tax period. For those interested in changing their tax period, the FTA has issued specific guidelines. These conditions and procedures are detailed in FTA Decision Number 5 of 2023, which outlines the criteria and steps for making a request for a change in the tax period. Businesses or individuals looking to change their tax period are advised to consult this decision to ensure that they meet all the requirements and properly follow the application process. Key points to remember. For businesses and legal entities, the tax period is generally their financial year, which corresponds to the period for which they prepare their financial statements. If a business does not prepare financial statements, the tax period defaults to the Gregorian calendar year, 1st January to 31st December. For natural persons, the tax period is always the Gregorian calendar year. Taxable persons may apply to the FTA to change their tax period, particularly to align with multinational group reporting or to adjust accounting periods. To change a tax period, taxable persons must follow the application process as outlined in FTA Decision Number 5 of 2023.